Well, the good news is that 163,000 new jobs were added to the economy during the month of July. The bad news is that the unemployment rate still did tick up to 8.3% in the Labor Department's latest unemployment report. The positives in the report seem to be significant though. 148,000 new positions were filled in the private sector, and overall job gains were the best in any month since way back in February. So the question that everyone seems to be asking is will these numbers discourage the Federal Reserve from thoughts of easing? And the answer is maybe and maybe not. Remember, July marked the 42nd straight month in which unemployment exceeded 8%. Personal incomes rose 0.5% in July, yet consumer spending was essentially flat. The Commerce Department said it actually decreased by less than 0.1%. The personal savings rate jumped almost 0.5% last month to almost 4.5% overall. The S&P Case-Shiller Home Price Index logged its second straight overall monthly gain and witnessed its best month in years. The year-over-year decrease in house prices across 20 cities was trimmed to just 0.7% in the May index. The Institute for Supply Management's July Manufacturing Index came in at a subpar 49.8 after a 49.7 June mark. In better news, ISM's Service Sector Index improved to 52.6 in July from June's reading of 52.1. Last week's policy statements from the Fed and European Central Bank wearied the markets, but the Dow rose 217 points after Friday's jobs report. The major U.S. indices all had winning weeks. The Dow was up almost 1.7%, closing at 13,096. The Nasdaq up 2% to 2967, and the S&P 500 up almost 2%, closing the week at 1390. Gold settled Friday at $16.09 an ounce, and oil at $91.40 a barrel. We've got a pretty light week this week with the exception of all the earnings reports that are rolling in. Tomorrow, Fed Chairman Ben Bernanke is going to chat with a number of teachers in a town hall meeting. And then on Thursday, we'll get data on June wholesale inventories and the latest initial jobless claims report. My name is Eric Hagan. I will keep my finger on the pulse of the economy and report back to you next Monday. So please be sure to subscribe right now, and I'll chat with you then.